Hey guys, welcome back. Okay, so a big hype stock, NIO, has tanked around 10% in the past few days, and a lot of people are concerned and want to know more about this stock. Full disclaimer, EV stock and hype names are not within my core competency, but I'll cover the basics for those that are interested in my take. Okay, so what happened? Yesterday, NIO, the Chinese electric vehicle maker, announced that it sold 68 million shares at $39 in a secondary offering to raise $2.6 billion. NIO shares tanked 5% pre-market, but ended the day only down 2.3% to around $41. But if you also look at Friday's action, it also tanked from $45 to $42 because this information was probably likely leaked ahead by insiders. So does the price drop make sense? Yes, secondary offerings usually lead to a price drop in the short term. Think of it like this. This is the NIO pie, and you own a piece of this pie. You own around 10%. However, when NIO issues more shares, the pie got bigger, but your piece of the pie is the same. So here, you now only own 9% given your portion got smaller relative to the bigger pie. Hence, it is bad for you because you got diluted down and now it is worth less than before. But you may be asking, well, I have a smaller piece, but the pie is worth more since NIO got more cash. Technically, this is true if you break it down to the fundamentals. You have less percent of the pie, but the pie is worth more. The problem is sometimes fundamentals don't reflect the current market value immediately. Here, we know that 68 million shares was sold to someone, most likely a large institutional player like a hedge fund or a large investor, who only was willing to pay for the stock at $39. Thus, they're saying to the market that the value should be lower than the current stock value. Yes, it's a bit complicated, and there are many analysts who would argue that this is a good sign of strength. We know that when you sell a large amount to someone, to a few buyers, they always want a discount, so that's normal. It also shows strength that someone's willing to invest in such a large amount into the company. However, on the other side of the argument is, why is the company raising cash? Did the company sell shares because it needs cash, or does it think its shares are overvalued and is trying to cash in now? Thus, as you can see, it's quite complicated, and there are debates on both sides whether a secondary offering is good or bad. But in general, on the short term, it usually leads to a price drop as we've seen here. Okay, so now what? Should you buy, sell, or hold? Well, as always, let's take a deeper look into the company. By the way, if you find this video helpful, please smash the like button and hit subscribe. And if you're interested in learning how to do a stock analysis, please check out our other videos above. So what does NIO offer? NIO is a Chinese company that sells electric vehicles mainly in China and Hong Kong, with some presence in the United States, the UK, and Germany. The company offers a coupe, 5, 6, and 7-seater electric SUVs. Here we have the EP9 Sports Coupe, EC6 SUV midsize 5-seater, EC6 SUV, and the EC8 SUV 7-seater. NIO is designed with luxury and comfort similar to Tesla. It is also innovating in automated driving, artificial intelligence, and is providing comprehensive and convenient charging solutions. Next, step 2. In looking at NIO's operation, we see that they have grown dramatically since 2018. In 2018, they sold about 8,000 vehicles. As of December 2020, year to date, NIO sold 36,721 vehicles, which is a growth of about 111%. Total cumulative deliveries of the company's ES8, ES6, and EC6 have reached 68,634 vehicles sold. Although this is relatively small compared to Tesla, the growth in 2020 is still quite good given COVID conditions. NIO has many competitors in China, but within the EV market, its direct competitor is Tesla, who has an 11% market share, and BYD with 14%. NIO, as of the latest report, has grown its market share closer to 7.4%. Hence, it is growing and capturing more market share. Looking at its financials, in Q3, NIO had total revenues of $666 million in the third quarter of 2020, representing an increase of 146.4% year over year. Gross profit was $86.3 million versus a loss of $35 million last year. This represents a gross profit margin of only 12%, which is quite low as compared to Tesla, which had a gross profit margin of 45%. To put this into perspective, this means that the cost to produce a vehicle is very high, as it only nets 12% of the sales price before it can even deduct its operational expenses. Hence, as you can see, NIO is losing a lot of money. In Q3, it lost $175 million. The hope is, as it scales its operation, it can lower its unit cost per vehicle. If not, the company will not survive. However, it does have a strong balance sheet with $3.2 billion in cash and only $1.4 billion in debt. This is before yesterday's additional $2.6 billion in the secondary share offering. Hence, it has a lot of time to further scale its business. With regards to valuation, we will compare it with its main competitor, Tesla. Since NIO does not have any profits, we will look at the EV to sales multiple. Here, NIO is trading at a lower multiple than Tesla, but it is expected to have double the growth. Thus, in comparison to Tesla, NIO is undervalued. Now, whether Tesla is overvalued or not is another discussion for another day. Next, looking at step 3. The current condition is quite good in China. China's economy has bounced back from the pandemic slump and in Q3 grew 5%. It has COVID under control and has already started vaccinating its citizens with its own vaccine. Thus, when the global economy recovers from this pandemic, China will likely continue to grow even faster. With regards to NIO, it has also done quite well. Auto sales saw double-digit growth in November, and electric vehicles saw 105% year-over-year growth. Hence, NIO was able to capture a large percentage of this increase and grow its sales over 100%. Next, step 4. Internally, in addition to new vehicles, NIO has been upgrading its vehicle technology and adding new features and products for its users. These solutions include Power Home, their home charging solution, Power Swap, their innovative battery swapping service, Power Mobile, their mobile charging service through charging trucks, and Power Express, their 24-hour on-demand pickup and drop-off charging service. NIO believes these solutions and services together will create a holistic user experience throughout the vehicle lifecycle. This should further increase sales and help to maximize their share price. Externally, in China, the government has extended its EV rebates for 2 more years. We expect NIO will greatly benefit if China continues to extend this even further. As for battery swap, NIO has provided more than 500,000 battery swaps for its customers. Other car makers may see the benefits of this technology and will license or work directly with NIO. If so, this will greatly help NIO increase their revenue. Next, step 5. In looking at the technical analysis, we see that NIO has been on a downtrend since peaking at $57.50 in late November. However, it seems to have support around the $40 level, which is in line with the market action we've seen since the secondary offering yesterday. Yesterday's buyers pushed the stock back up to $41 when it opened around $39. But since it is in a downward trend, if it breaks the $40 support, then it could fall sharply to the next support at around $25 to $30. Remember, this stock has already gained 1,600% year to date, so it is a very high risk, high reward stock. Overall, the stock is too risky for me personally, and I wouldn't feel comfortable investing in a stock that I would have to worry about each day. I don't recommend buying any high valuation momentum stock that I do not feel I have enough knowledge about the business. I also don't recommend Chinese names because you can't rely on their reported financials, since they don't have to abide by SEC GAAP standards like US companies. We've seen this with Luckin Coffee where they were faking sales numbers. I've worked in Asian countries before and I know firsthand there's many creative accounting. However, if you still wish to invest in NIO as a speculative stock, do keep your allocation small to only about 5% of your total portfolio. I hope this video was helpful. Thanks again for watching. Please don't forget to subscribe.